Hello everyone, welcome to this RICS regulation presentation. I'm Graham Stockey, Principal Surveyor at RICS Regulation, and we'll be joined by Peter Dixon, one of our most experienced regulatory surveyors. The programme provides details on changes to firm regulation and an overview of value of registration and the requirements of value of registration. We'll start with an overview of the changes to firm regulation. Summary of changes. There is key information that firms must be aware of. We have introduced a new requirement for firms to ensure that at least 25% of the firm's principals are RICS members. Firms must designate going forward a responsible principal. There are new rules to ensure only regulated firms can use the RICS logo. Rules come into force on 1st April 2020 with a 12-month transition period. Firms must be compliant by this date. The rules will be published on 1st April 2019. RICS is applying a 12-month transition period to allow firms the opportunity to understand and adopt the rules' new requirements within a reasonable period. RICS will begin enforcing the new rules on 1st April 2020. Firms must comply with the new requirements by this date to avoid any disciplinary action by RICS. Up until 1st April 2020, firms must remain compliant with the existing rules. You should be familiar with these rules, and they are available on the RICS website for reference. Firm regulation. Background. The background to firm regulation. Brian Carlsberg was commissioned in 2005 to complete a review of regulation for chartered surveyors. The final report released in 2005 called on RICS to regulate firms as well as individuals. The RICS model for firm regulation was first introduced in 2007. Over 10 years on, we need to ensure that it remains fit for purpose in the current times. RICS regulates firms because they have a key role in implementing the professional standards vital to the welfare of society, the built environment and the economy. There is also a need to address the public expectation that transparent and proper corporate governance practices means holding business leaders accountable for their firm's conduct, performance and service. We need to ensure the firm regulation model is fit for purpose to provide confidence to the public and clients, safeguard the reputation of the profession, support professionals to live up to the public's expectations, and the review showed a lack of accountability for meeting RICS requirements at board and senior levels in the firm, client confusion from the use of RICS logo by unregulated firms outside the UK, and a lack of clarity for clients over what is regulated and for what, leading to loss of protection and confidence, with attendant risks of reputational damage to RICS. Changes to firm regulation requirements. Why did we make this change? The review of the RICS firm regulation model highlighted that as the RICS profession and brand grows, having a single RICS qualified principal does not provide sufficient assurance that RICS professional standards have adequate influence within the senior management of all firms. In order to address these concerns, the Regulatory Board made the decision to require that 25% of a firm's principals must be RICS members. What's the new rule? The rule states that a firm is eligible to register for regulation by RICS if the firm provides surveying services to the public, and at least 25% of the firm's principals are RICS members. The rules include a new requirement for firms to ensure that at least 25% of the firm's principals are RICS qualified. RICS qualified includes chartered and non-chartered members of RICS, including ASOC RICS, MRICS, FRICS. Principal is defined in the interpretation section of the RICS rules for the registration of firms. Firms will need to use an element of discretion when determining whether an individual is a principal in a firm, as position titles will vary across firms. We consider a principal to be an individual who provides surveying services to the public, and those services are not under the direct supervision of another person at the firm. This person will likely be a senior leader in the firm and commonly, but not always necessarily, will have either director or principal in their job title. The wide scope of this definition means that registered principal, for RICS purposes, encompasses both the leading and directing executive of firms, and in many firms, the wider senior management group. We acknowledge that job titles and job responsibilities will differ significantly across firms. Therefore, we encourage firms to focus on the seniority of individuals within a firm and role responsibilities rather than job titles when identifying principals within a firm. What if a firm can't meet the new requirement? We have completed some analysis to assess the number of firms that we think will be unable to meet the 25% RICS member principal threshold. We believe the number of firms is likely to be low. If a firm is unable to meet the new requirement, the firm may still be eligible to register or stay registered for regulation at the discretion of the RICS Head of Regulation. The firm will need to either have a plan to secure compliance within a reasonable period, be supported and supervised by another RICS registered firm, or demonstrate that there is a strong public interest in regulating the firm. We recommend all firms that think they will fall outside of compliance with the new requirements to contact RICS so we can work together through the options for the firm. Responsible principal. Why did we introduce the responsible principal role? We recognise that there is an increasing public expectation in many countries for transparent and proper corporate governance. We want to ensure that senior leaders and decision makers of RICS regulated firms are more clearly accountable for their firm's compliance with RICS standards. By introducing the role of a responsible principal, we can ensure that there is an individual in every firm that will have primary responsibility for ensuring that RICS professional, technical and ethical standards are applied, upheld and supported by an appropriate assurance framework. This would align RICS firms' regulatory regime more closely with other professions with established practice oblique firm-based regulation, such as auditors, pharmacists or solicitors. Almost all of those who responded to the consultation and the stakeholders we spoke to during the consultation supported the policy intent of introducing a responsible principal into a regulatory framework and the envisaged responsibilities of that responsible principal. The responsible principal will have a primary responsibility for ensuring that within a firm, RICS professional, technical and ethical standards are applied, upheld and supported by an appropriate assurance framework. We expect the responsible principal to be an empowered conduit between the firm and RICS and to support a good corporate culture going beyond baseline compliance and encouraging strong professional values. In addition to this, the individual will need to ensure corporate cooperation with our ICS regulatory processes, such as monitoring, investigations and disciplinary procedures. Our expectation is that the responsible principal will normally be a senior RICS member within the firm and also a person in a position of leadership who can influence the strategic objectives of and significant decisions made by the firm, a person with experience and understanding of regulatory compliance activities, a person who understands the obligations of being an RICS regulated firm and the main point of engagement with RICS in relation to the firm's compliance with RICS principles. RICS encourages firms to nominate an RICS member for the role of responsible principal. However, we acknowledge that it may not be practical for firms to do so in every circumstance. For example, a firm may choose to appoint a senior lawyer or accountant to the role, as these professions typically take on and have experience in compliance activities. From 1st September 2019, firms will be able to nominate a responsible principal via the RICS online registration system. It is the responsibility of the responsible principal nominee and firm nominee to ensure that the nominee completely understands the role and responsibilities of the responsible principal. The responsible principal nominee will be asked to complete a fit and proper person test to determine appropriateness. The assessment asks nominees about any criminal offences, any judicial or administrative orders, or disciplinary findings through RICS or another body. The formal responsibility of the responsible principal are outlined in Section 7 of the new rules, and the guidance is available at rics.org. However, to give you an overview, we expect the responsible principal to ensure the firm meets the obligations as an RICS regulated firm, ensure the firm has implemented systems and control to ensure compliance with legal or statutory obligations, ensuring all information provided to RICS is truthful and adequate, ensuring processes and systems are in place to record any failure to comply with RICS requirements or statutory obligations. The previous RICS contact officer role has been removed in place of the new responsible principal role. We consider that the responsible principal should be the primary regulatory contact for RICS within the firm. However, there may be situations where the responsible principal needs to delegate the position of primary contact officer to another individual. New rules for the use of the RICS logo and designation. We've taken this opportunity to simplify the structure of the rules in relation to the use of our logo. The hierarchy of rules now includes an overarching rules document, an appendix which outlines the policy and guidelines for using the logo and designations, and detailed branding guidelines which provide specific guidance on how to use the RICS branding. The new rules restrict the use of the RICS logo to registered firms only. Previously, firms which conducted surveying activities outside of the UK were able to use the RICS logo without being registered for regulation if they had one chartered surveyor principal employee. Why did we make this change? By adopting a globally consistent approach towards the use of the RICS logo, it will become easier for clients in the marketplace to identify firms working to RICS's globally recognised standards. Non-regulated firms using the RICS logo have until 1st April 2020 to register for regulation with RICS or cease using the logo from that date. From 1st April 2020, we will enforce any non-compliance with these rules through legal and disciplinary action. Detailed Detailed guidance on the correct use of the RICS logo can be found on the RICS website. The rules have changed to allow firms to use the designation Chartered Surveyors in a trading name only. Previously, firms were also able to use the designation as part of a company name. This rule is not retrospective in application, therefore any firms that currently use the designation Chartered Surveyors in a company name are not required to remove the designation. However, over time we expect firms to move away from using the designation as part of a company name. If you have any questions regarding the use of Chartered Surveyor designation for your firm, please contact RICS. Timings. As previously discussed, 1st April 2019, the rules and guidance are published with a one-year transition. Quarter 4 of 2019, registration for responsible principal role opens. On 1st April 2020, the new rules become enforceable. Sorry about the pace that we went through that thing, but I think it's an important addition to what RICS and how RICS operate the regulation of firms. We will now move on to value registration, providing details on what the scheme does, how it does it, and how we proceed.
And I'll take over now. My name is Peter Dixon, and I'm one of the professional assurance surveyors employed in valuer registration in RICS regulation. So, valuer registration, what does it do? With all these slides, I'm going to be giving an overview rather than simply reading what it says. You can do that for yourself. But what does value registration do? It is basically a risk monitoring and quality assurance tool. It's something that you can use for yourself, and it's something that we use to ensure that Red Book is being complied with and standards are being met. It's about best practice. It's about seeing that the firms and members are complying with best practice, but also about sharing best practice, which we have discovered in other firms. At the last count, there were over 16,000 registered valuers in the UK and worldwide, coming from approximately 3,200 sponsoring firms. So that gives you an idea of the scale of value registration, there being, something like 150,000 members worldwide. From the 31st of July 2019, the value registration becomes mandatory in all of those countries listed there, from Albania to Vatican City, which I count up to being 31 countries. Oops, too far. Sorry, it's a little slow in responding to the buttons. Here we are. So, frequently asked questions about VR and Red Book. First of all, do I always need to apply Red Book? Yes, there is something to clarify here. All written valuations of any kind for any purpose are subject to Red Book. However, there are certain categories of valuations which are not subject or excluded from the mandatory application of VPS 1 to 5. But PS1 and PS2 always apply to all written valuations. Moreover, VPS 1 to 5, even though not mandatory in certain cases, should nevertheless be regarded as the gold standard and followed as far as possible. Do I need to join VR? Well, yes, if you prepare valuations within a country where VR is mandatory for members. What if my work falls into the exceptions category of PS 1.5? Well, there are a small number of exceptions, mainly around estate agency, acquisition and disposal, if expert witness work is not subject to the mandatory application of VPS 1-5, but it does have its own practice statement, which is mandatory. And furthermore, wherever the court rules that you're working to do not contradict VPS 1-5, then you should still follow VPS 1-5 as far as possible. There are certain statutory functions which are outside VPS 1-5, for example, the production of rating assessments and rating lists. Valuations for purely internal purposes. Now, an internal purpose is one where the client is not going to share the information outside his firm, outside his board of directors, and it is for the internal decision-making processes of that company. But I think you should approach such a evaluation with extreme caution. Very often, purely internal purposes is used by clients because they don't really want to tell you what they're actually going to use it for. You are exposing yourself to a certain amount of risk in not clearly identifying the purpose of the valuation. So a note of caution there. Finally, valuation advice, which is in negotiation or litigation. Moving on. So, value registration benefits. Well, VR members, it gives us a competitive advantage in the market because we are working to an internationally recognized gold standard. It benefits the public, for lenders and investors. It's recognized by all the major banks and building societies. Insurers like it, that is to say your professional indemnity insurers like it. Government likes it. Overall, this is the standard to work to, and being part of that gives you that advantage over someone who only has perhaps a local qualification or indeed no qualification at all. So moving on now to regulation and standards, models and procedures. We have the rules of conduct, and value registration falls within rules of conduct. Should any disciplinary action be necessary, it will be under a rule of conduct rather than simply because of a failure to comply with Red Book. In other words, failure to comply with Red Book is a conduct issue. And our regulatory operating model. We get risk analysis and intelligence about firms. We have your annual returns. We know something about how you operate and what you do. And we build up risk profiles of firms from that information. We do a certain amount of random testing, but we do try to focus on firms which appear to have, from the information available, a higher risk profile than others. And if you are doing secured lending valuations, that's going to put you in a higher risk category straight away. Professional assurance, this is about monitoring, about registration of valuers, and about auditing. It's how we keep in touch with you and assess your compliance and the standards, and also spread and share the best practice that we find. And finally, conduct. We find that the vast majority of our members are adequately compliant with Red Book, and disciplinary and conduct procedures are only necessary in a small minority of cases. So our approach is risk-based. We try to keep our visits to those whose risk profile is considered to warrant a visit. We try to keep a professional and transparent approach to our work and to focus on key issues and risk. We're not there to pick you up on the letter of the law, but very much more on the spirit of the law and whether or not your non-compliance with a particular requirement actually creates risk for the client, for yourself, and for the general reputation of RICS. Our approach is very much more about leading firms and members into compliance, and that's much better that enforcement. We're very keen that you should understand the reasons for the requirements of Red Book, and that you should willingly go along with it as a process of best practice. So what happens in a review? There are two essential ways of doing a review. We can either come and pay you a visit, or we can do it remotely off-site using IT. But whichever way we do it, the process is essentially the same. First of all, we will complete a questionnaire which tells us information, background information about the firm and yourselves, and what kinds of valuations you undertake, what is the general broader scope of work of the firm, your quality assurance processes, your professional indemnity insurance, and all sorts of things of that nature, which will give us a broad overview of the firm. Having established that and got that background information, we then start to review a sample or selection of files, valuation files, and at the end of that we will give you our feedback in an interview. Incidentally, when we do come and see you from looking at files, we don't want to see the great big fat files that you're really proud of that was a difficult case to deal with. They're very difficult to read through. It's much better if you just give us a simple valuation, because what we're looking for is not the complexity of the case and how well you handled it. We're looking for the essential process, the step-by-step process which you have gone through to ensure that the valuation resulting is fit for purpose. So let's move on now. VR, Red Book, and compliance and risk reduction. I'll hand you back to Graham.
Thank you. Client need, compliance and risk reduction. What do valuation users want? They want the assurance that the valuer is competent and qualified to undertake the task for the client. Is totally independent, has no conflict of interests. Plain language, accessible reports with technical terms defined, so that the client can actually understand the report that's been paid for. Compliance with professional and international standards, ICS, IVS. The client needs to know that those particular elements have been complied with. But above all, international clients want consistency. They want to know that if they appoint an RICS valuer, it doesn't matter whether that valuer is in New York, Japan, China, South Africa, or anywhere in Europe. The same standards and content will apply. How do we comply? How do we reduce risk? We'll examine the basic requirements of the global standards, 2017. The standards are there to ensure that the report you produce is fit for purpose. It's a two-way street. Failure to comply with Red Book undermines your ability to defend your valuation. It's a valuer's best friend, simply on the basis that it's a risk management tool. Compliance with Red Book reduces risk. The job of the valuer is not simply to provide the client with a correct opinion of value. The job of the valuer is to provide an opinion of value which can be demonstrated to be reliable because it's been arrived at by following a comprehensive, structured, analytical, calculated and reasoned approach. How do we comply? How do we reduce risk? One of the strongest defences to an allegation of negligence is the ability to say, I did it by the book. If I've done it by the book, I've not been negligent. It's not enough to comply with the Red Book. You must be seen to comply, and this requires an audit trail in the file. This is your first line of defence against any allegation of negligence. How do we complete an audit trail? It's a series of documentary records showing the steps you've taken in arriving at the findings of your report. What should be included in this audit trail? Prior involvement and conflict of interest checks, settled terms of engagement, all the detailed notes involving your inspections, inquiries, third-party information, comparable information, analysis and differentiation, the valuation calculation and rationale, a compliant valuation report, a file note of everything from first contact to report. You keep nothing in your head which isn't in the file, and nothing in the report which isn't backed up by a file note. Develop a comprehensive suite of note templates for site inspection and valuation process, and as far as possible make these task and product or property type specific. Tailored and fully compliant templates for terms of engagement and valuation reports. If you make up your template properly, it should protect you in the future. And I'll hand you back to my colleague.
So what are the standards? Excuse me. What are the standards and what are we looking for? So ethics, competency and objectivism and disclosure. We need robust and formal conflict of interest checks, and these need to be recorded in the case file. You need to include cross-discipline and associated activity checks. I'd say one comment on all of this is that conflict of interest is not a feeling. You may not feel conflicted. Conflict comes through a set of circumstances and relationships. So that is why when you're investigating conflict, you should not examine your conscience, but rather you should examine the company records. See whether or not you have seen this, you know the people involved, and whether or not you have seen this property before, and therefore are there any circumstances or relationships which might be perceived, and I use that word advisedly, might be perceived to be a conflict. In terms of engagement, you can read the slide for yourself. What I want to say about this is that terms of engagement, although it is a contract between you and your client, it's not helpful to think of it in those terms because that immediately introduces an element of conflict, which isn't the idea at all. Terms of engagement are better understood as a memorandum of agreement between you and your client about exactly what you've been asked to do and what is the scope of the work that you're going to do and what are the standards that you're going to be working to, so that both you and your client are absolutely agreed about what you're going to do, and they can therefore be sure that they're going to get the tailored report which they've asked for. Now, Red Book VPS 1 has a list within it of roughly 20 things which need to go into the terms of engagement. Each one of those things you can see listed there must be included, and some comment must be made under each one of those in your terms of engagement. You can read them for yourself in VPS 1. I shan't go through them all now. The list continues over the page. This is not like an exam paper of 20 questions where you must attempt any 5. You must have something there about all of them. And it says at the bottom, terms of engagement are a memorandum of the scope of the valuer's instructions. That's precisely what it is. If you get that clearly agreed at the beginning of the task, that is going to form the basis of your defence, should anything ever be questioned later on. Because you can refer back to your terms of engagement and say, but this is what we agreed I would do. So if, for example, a building turns out to have asbestos or contamination, and your terms of engagement clearly state and agree that asbestos will not be investigated, well, there is the basis of your defence. It was outside, from the beginning, outside the scope of the work that they commissioned. VPS 2, inspections and investigations. Now, there are two things that overlap here. One is VPS 2. The first section is inspections and investigations must always be carried out to the extent necessary to produce a valuation that is professionally adequate for its purpose. That's great. At the bottom of that slide, a proper record must be kept, so that's good. Yes, we've got that. This also overlaps, however, with VPGA 8. Now, VPGA 8 gives a list of matters which are likely to affect value. They are not going to surprise you. They include location, type of building, construction, age, services, planning permissions, site conditions, contamination, asbestos, and so forth. The valuation practice guidance applications are not mandatory, but nevertheless, you need to have a good reason not to follow them, because they are best practice. And if you are ever, if your work is ever called into question either by a court or by an RICS investigation, you would need to justify why you did not follow a guidance note or a guidance application. This paragraph here, which is VPS 2, if you want to write this down, VPS 2 section 3.2 is fundamental to maintain a proper audit trail and be in a position to respond effectively to a future inquiry. Get this, legible notes, that means I can read them, which may include photographs. We say photographs are a good supplement, but they are not a substitute. You still need written notes. A picture paints 1,000 words. I want to know which 1,000 you had in mind. What is this photograph telling us? So we must have legible notes of the findings, and particularly the limits of the inspection and the circumstances. So that's what time did I get there, what time did I leave, how did I get in, who was there, what were the limits of my inspection, were there things I couldn't see, were there rooms that were locked or floor coverings or what have you. These notes are of fundamental importance in defending yourself subsequently to an allegation of negligence. The client may well say you were only on site for 10 minutes, so you need to have a site note which tells a different story. Moving on to VPS 3 is about the content of reports, and again there is a list of about 17 things which need to go into the report. If you compare it with the list in VPS 1, you will see that it's almost exactly the same list. So the best thing to do, and what I strongly recommend, is that for all of the information that is listed in VPS 3, you simply copy and paste it from the terms of engagement. Now that means therefore that the report says exactly the same as the terms of engagement. Not roughly the same, but exactly the same. This avoids any confusion, any contradiction, any omission. And it means that if you will avoid also having some clever barrister or lawyer having you in the witness box asking you to explain why it was in the terms of engagement you said this, but in the report you said that, and they weren't quite the same. So copy and paste will avoid that embarrassment in a court. There's the continuation of the list, and I said it's the same as the terms of engagement. And then VPS 4, this covers the issue of basis of value. It's absolutely fundamental to get the correct basis of value and also to declare in the terms of engagement and the report the correct current definition, which is in the International Valuation Standards. Assumptions, very important to have these clearly set out. Nobody does full due diligence on a valuation except in rare circumstances. In order to provide a valuation report within a reasonable time frame and at an economic cost, it is normal to make limited investigations, limited inspections. That means that there's a lot of things that you don't know for certain, and therefore whatever you don't know for certain, you cover with an assumption. Those limitations in the scope of the work must be agreed with the client before you start, and the assumptions which they lead to must also be agreed and put into your terms of engagement. So, for example, we will not do a building survey. We will only make such inspections as are necessary to determine the apparent condition of the property. Therefore, we will make a working assumption that the building is in satisfactory condition unless we find otherwise. Now, that is not offering the client any warranty about condition, but it is simply your working assumption for the purpose of the valuation. Special assumptions, finally a brief word about special assumptions. Distinguish them from general assumptions. A special assumption is something which is not true, but you're going to pretend that it is true. In other words, these are hypothetical situations. Your client will often ask you things like, what would my property be worth if I had planning permission to change its use? You haven't got the planning permission, it's just a hypothetical assumption. Similarly, he might ask, what would my property be worth if I built a large extension? There is no permission for the extension, there is no extension, it's a hypothetical assumption. So these are special assumptions. They need to be clearly set out. One point there is that vacant possession is a special assumption, and also if you're working for a bank, 90 days, a 90 days limited sale time would also be a special assumption. And finally, just to note that the RICS recognises three different basic approaches to evaluation: the market approach, the income approach, and the cost approach. It's important that you keep up with changes in language, because otherwise you are vulnerable to the criticism of being unprofessional and not reading the Red Book and keeping up. So there we go. And finally, just a list of the evaluation practice guidance applications, and just to reiterate what I said earlier, is that these are guidance, and they are not mandatory, but we do expect you to follow them, and you would have to be able to justify not following them should your work ever be called into question. And so I'll hand you back now to Graham, who's going to talk about some of the common failings we find when we visit firms.
Hi again. In relation to PS2 of Red Book, it deals with competence, qualification and independence. And some of the common issues that we find are failure to demonstrate competence in relation to key specialist skills, failure to carry out robust independence and previous involvement checks, and where the conflict checks are carried out, they're not recorded. If they're not recorded, they didn't happen. You'll see the one at the bottom, which is badging of valuation reports carried out by non-members and signed by the only member registered valuer in the firm without any sort of supervision. This is something that we ask, we require firms to detail in the file what supervision has actually been carried out. In terms of engagement, you can see from the list that there's still areas where people fall below a line which provides them with protection. Terms of engagement is the most important section of Red Book compliance for a valuer and a valuation firm, because it's the one section which provides them with an ability to defend a claim in the future. You told me to do X, Y, and Z. I did X, Y, and Z. You can see from the screen some of the key failures are in items like Clear purpose of valuation not defined. Nature and extent of the valuer's work not defined. The sources of information that were relied on for the valuation are not detailed. The assumptions are not agreed before the job is carried out. Above all, actually, often a failure to actually settle any form of terms of engagement or contract, where there's actually nothing which is actually written or in any form which could be relied on. The results have been better than expected, particularly for the smaller firms, and most firms do now tend to try to get an agreement before proceeding. The content for most firms and most locations has been somewhat variable. For EMEA, particularly for Central Europe, the content and approach to terms of engagement is certainly as good as it was in the UK at a similar stage of VR development. Inspections and investigations. We still have files that turn up which are illegible, unstructured, have insufficient site notes, and don't actually provide any form of audit trail. Lots of photographs and externally sourced, but often non-referenced material is relied on to produce the valuation. Comparable data often is left unsourced, and it's not dated or referenced. There's no comparable analysis on the file, and it doesn't matter how many comparables you've got. If you've not carried out an analysis profile on them, they're just so much waste paper. No valuation calculation or valuation rationale in the file, often no linkage between the comparables and the valuation. More often than not, I will say, there has generally been in the European market a very good approach to the valuation exercise in terms of linking everything together. I think the one comment I would make here, there's often too big a variation in countries between the good and the bad examples. The valuation report, it is pretty much a mirror image of the terms of engagement in terms of the quality of what's done, of the content, and the valuer's ability to paint a picture which protects him or her if ever called in, the valuation is ever called into question. I've not read through the whole of these, but certainly I wouldn't have said that the results in Europe or the wider EMEA region were anything other than as good as the results we were finding in the UK at a similar stage. I think one that we have come across, and Peter was talking about using cut and paste as a way of making sure that terms of engagement and report remain consistent. We've actually looked at some reports where there's been a failure to amend errors when actually cutting and pasting from previous reports into a current report. VPS 4, the common faults here, particularly for basis of value, is a failure to actually include the correct definition and actually to be able to demonstrate that the valuer had actually understood the definition. A generic lack of detail around assumptions, and often generic or unconsidered assumptions. What's an unconsidered assumption? An unconsidered assumption is where you actually look at something like a mining or environmental report and base your valuation on that report, but still have a statement in your assumptions that you're going to assume that the property isn't actually on a contaminated or undermined site. You can't cover, it just looks silly to have you saying one thing in one part of the report and a completely diametrically opposite thing in another part of the report, particularly if the client doesn't actually know at the end up Which base was the one that was used? Special assumptions not clearly defined, or the impact and value not stated. Failure to link the scope of inspection, assumptions and information sources to provide a clear picture of what's been reported to the client. DPS 5, often there's a lack of clarity to support the valuation methodology, failure to state the approaches or methods used, on occasion, and I will say a very rare occurrence, use of the wrong method to produce a wholly misleading valuation. At the risk of repeating some earlier statements, it's of paramount importance that the valuer demonstrate the professional expertise to use the correct valuation approach. A failure to do so will result in a misleading or simply wrong valuation and put the client and associated stakeholders at risk. We ensure that the valuation approach and methodology are appropriate to the property and valuation purpose. Our very brief closing summary. The lessons we ask valuers to take away. Always create an audit trail in the case file to support the valuation. It's not enough to comply with Red Book. The valuer must leave an audit trail to show that they've complied in the face of any challenge to their valuation. The valuer's first and best defence to an allegation of negligence is to say, I did it by the book. If I've done it by the book, I've not been negligent. If I've done it by the book, I've satisfied the rules of conduct for members. Rule 4. Members shall carry out their professional work with due care, skill and diligence, and with proper regard for the technical standards expected of them. By achieving the above, the valuer reduces their own risk, reduces risk for the client and associated stakeholders, and provides better quality advice, which in return reduces the risk of any damage to RICS reputation.